Let's go on oil. Now, if we look at oil this morning, the first thing we're going to do is we're going to look at this moving average chart. Moving averages are absolutely worthless. Traders that trade moving averages for entries are not successful traders over the long term because they're lagging indicators. In fact, there's trading rooms out there that just use moving averages, and those trading rooms are not educating you the proper way how to trade the market because they are lagging indicators. So how do we use moving averages? Why do we use them? How do we apply them in the room? We use them for trend direction or range or chop. We need to establish one of two things when we first log in. Are we in trend? Are we in chop? If we are in trend, the moving averages will be crossed down in one direction. The white will be under the longer term moving average, or white will be above the longer term moving average. And if it's below it, then we are in a downtrend. The angle of the magenta, which is the dominant moving average, will tell us the overall bias also. So we knew right away when we log in at 7:45 to 10:45, you don't need to trade this any other time. Just trade 7:45 to 10:45. We're already 1 for 1 on crude oil. We're 1 for 1 on gold. There's only 2 exact bar entries that came in. No other way to enter the trades that worked on both. Now what we do is this. If we're in a downtrend, the moving averages will cross down, we look to do one thing. We look to sell HVA, these red dots here. So we're either selling 94.97 or 94.55. That's my number one trade. You sell the 2 red dots on the 2 5-minute charts. You got a bottom left chart, that is a 5-minute chart. You got a middle chart, that's a 5-minute chart. So we need to sell 2 areas. We know to sell 94.97 this morning, and we know to sell 94.55. Now what we have here is we have the hedge fund right here at 45, just under 45. So when I logged into the trading room, I got on right at this peak high. When we were right at 45, I said, this is the sell area right now. We'll look for a spinning top right when I got on the mic. And I said, look for a spinning top. That'll be your entry. Sure enough, right after I got off the mic, spinning top comes in. We get a good trade on crude oil to the downside. Now, how do you qualify the trade? How you qualify it is when you come up into the HVA or into the hedge fund for a number one trade, because we're in a downtrend, we're only looking to take shorts, no longs. When you come into it, you use the 89 tick for entry. So we use the 2 5-minute charts to set us up. We sell the first test of the red on either chart, the first test only the first test. That's where the order flow is. And what we do is we try to see when the buyers are going to get trapped. A good technique I teach you guys and gals on this 89 tick chart, look for big, giant, long bars coming into the resistance. Big bar, big bar, big bar. That tells me that the buyers are getting trapped into resistance at my hedge fund. I look for a spinning top. 80 to almost 90% actually will be spinning tops or dojis on my entry techniques. A spinning top looks like a little box in the middle, equal wicks on both sides. That tells me that's a reversal candle. And then I look for the red reversal bar. Once I see the red reversal bar, that encloses, that's my entry technique to open it up at the next bar at 45 short. 45 short, exactly like that. Before we hit the red reversal bar, to confirm, you can look straight down and use my oscillator below. These markets are supply-controlled markets. Any trader that's been trading as long as I have, over 20 years, recognize that we are supply-based. We are not demand-based. So we want to see more supply as we move into resistance. We want to see less supply as we move into support. So as we move into resistance on my hedge fund short, this red dashed line, or my HVA, I want to look for big, long bars, big bars that tells me that the buyers are getting trapped, okay? Then look for small bars. That tells me the reversal is impending. And then we look for a red reversal bar to confirm. When you get a little bit of more of experience in the room, some traders are waiting for the doji or the spinning top and opening up right at the next bar, not even waiting for the reversal bar. But I don't suggest you do that until a couple months experience in the room, and then you can just wait for the red reversal bar to close and then enter the trade. Some traders that send me their charts over are getting in right at the peak. Okay, so now you use how you use the J extension. We do have an indicator that we lease per month, $150 lease per month. It works on all markets. I don't care if you trade the S&P. I don't care if you trade pork bellies. It doesn't matter what you trade. It works on all markets. And what it is, it's called the J extension. And how we use that, there's a chart right there. You can look at it. How we use that is we use it in conjunction with my support and resistance. So I only use the extension on support and resistance with trend from 745 to 1045. So if I'm coming into my red dots HVA on the first test or my hedge fund, I'm looking for that J extension to fire. I want that extension to fire right at the highs or lows. I want a red dot to pop up my own ninja charts. And that's exactly what it did. Fired exactly at the high. Okay? Gerald, go over to gold. Go over to gold if you can. Now if we look at gold, let me know if you're on gold, man. Gold was just the opposite. We're looking for the number one trade. The number one trade, we look at the first thing we look at is the moving averages. I don't care about anything else. I don't care where market profile is. I don't care about anything about that stuff. I want to know if I'm trend or chop. It's very, very easy to see that gold was in an uptrend. You have to be blind as a bat not to understand that we are only buying on gold this morning. So if you look, the magenta, the dominant moving average was angled up. We want to be a buyer. We had spread in between. The white moving average, that tells me spread. Spread equals strength. We want to look at the bottom left chart. Now we want to buy the green. We want to buy the green dots. So I'm either going to be a buyer at 1387 or I'm going to be a buyer at 1381. That's the only two spots I'm going to be a buyer on gold if I'm trading a number one trade. So what do? It comes down to 1387, stops it to almost the exact tick. Look at your 89 tick. As we move down into the 1387 to buy LVA in the first test, do I have big, giant, long bars to show me that the sellers are getting trapped? You betcha. Huge, giant, long bar right here telling me that sellers are getting trapped. I look for what? 80, 90% of my tops and bottoms in the room are doji and spinning tops. When you know it, there's our big spinning top. Off to the races. There we go again. Did we have less supply down below at the time LVA is being hit? We have a higher low indicator below telling me I got less supply. Then we go back up. So both number ones have worked. Gerald, go over to gold one more time. I mean oil. Now let me show you something. And I'm going to shut this off and you can review this. Okay? Let me show you something. Oil. If you trade this the right way, now check this out. The first test of the LVA, we had an uptrend yesterday. What did I say at 8:15 yesterday? I said we want to buy the first test of LVA. Well, it eventually came. There it is. Right to it. We were in an uptrend. See how we never hit the LVAs? All of a sudden comes down to LVA. Bam. Straight up. Let's look at the previous days. Downtrend. I said we're going to sell the first test of HVA. Comes up to it. We get the big bars going into it. Reversal. Bam. Huge trade. Was in a downtrend. Next day, we're in a huge downtrend. I said sell the first test of HVA. Stops it to almost the exact tick. We had huge bars on the 89 tick. Stops it. Reverses. My point is, guys and gals, is that if you just concentrate on the number one trade, it's phenomenal. This morning, number one also. So, you just have to just be patient, wait for the number one trades, and you're good to go. Okay, they're extremely accurate in the room. They're easy to implement because we know exactly when the buyers or sellers are getting trapped based upon my technique. We're good to go.